Tabs on the economy and the housing market here in Arizona affected by higher mortgage rates.
ABC15's Marissa Sarbag has been tracking them over the last few years and joins us with how this impacts you. Marissa.
Javier, Katie, in early 2022, the Federal Reserve started aggressively increasing interest rates, getting us to this 5.25% to 5.5% now. The goal for the rate hikes is to cool inflation down to 2%. An economic forecast today showing inflation has cooled to just around 3%, but still not enough for the Fed to make cuts to the interest rates. And as we know, that, along with other factors, affects your mortgage rates.
I would definitely say that in 2021, it was immediate. As soon as a house went on the market, there was a line out the door. Even at open houses, I went to some that were, not kidding, all the way down the street.
Valley realtors like Greg Cly have seen the change in the real estate market firsthand. As the Fed raised rates, stagnancy barreled into markets across the country, including the Phoenix metro area.
The buyers that are looking to buy their first home, they can't buy that first home because the people that own those first homes that aren't ready to get rid of that low interest rate, they're not going anywhere.
Scottsdale homeowner Michael Castaneda is just one example of that.
Well, I have a 2.5 interest rate, which is really good. I bought it back in 2007. It was a foreclosure, a 1,200 square foot place, and we'd like to get something bigger.
He crunched the numbers and doesn't know if it pays off to move right now.
I bought it for $115,000. And they're offering me 300 plus for it. But to sell and then go into a new place, and where am I going to move for that price?
Stories like these making it more challenging for mortgage lenders to keep movement in the housing market.
They feel like they're locked in. And so that's a term that's been thrown around where, a big majority of loans right now are, in the 3 to 4% range, 30-year fixed rates. And so it's tough, right, mentally for consumers to walk away from that, to refinance, to purchase, because they don't want to step into a rate that's at 7%.
The Fed's target goal for inflation is 2%, so interest rates will stay put for a little while longer.
I think actually today was positive. Inflation came out, a reading called Consumer Price Index, and actually it surprised to the positive, right? So inflation came in at 0% on a month-over-month basis for May. And so year over year, it actually decreased.
The Fed is set to meet 4 more times this year. It's possible we could see 1 or even 2 rate cuts before the end of 2024. Marissa Sarbag, ABC 15, Arizona.